So look at the next question on December 2023 sitting, and we are looking at the specialization. Already we have covered the question on management accounting, where they were testing the regression. That was question number 23, and now question number 24. Question number 24, they were testing the audit. This was question on audit. The specialization, remember there are three questions: a question on management accounting, a question on auditing, and a question on taxation. So this is a question on auditing and almost the same question that they have been testing for 3 consecutive sittings. The only thing, this one they brought it as an incomplete record. So you shall read through and be able to attempt it. So your new audit client Safari Limited began operations in 2021. Unfortunately, Safari Limited has not availed the audited. Just a minute, I increase the font size, change to Times New Roman, font size 12. That way, font size 12. That one is okay. So your new audit client Safari Limited began operations in 2021. Unfortunately, Safari Limited has not availed the audited financial statement for 2021 due to disagreement with the former auditor. After observing all the protocols, you proceed to audit the financial statement for the year 2022. The client uses a part-time accountant whose work is to update prime records, prepare bank reconciliation, and some aspects of the ledger. After analyzing the records, you are able to extract the following. So you have the cash book, cash at the bank, then the cash in hand, then you have the trade receivable, the trade payable, and we have the other balances on 1st January and in December 2022. And you are told the owner introduced additional capital by cash of 850, and by cash, of which 850 was agreed as share premium. Land is to be revalued upward by 10 million. The following amounts have been agreed for depreciation. We have the building, the motor vehicle, furniture, and equipment. So these are the depreciation. The following adjustments are necessary: accrued administrative expense, prepaid operating expense, income tax expense, credit loss, and expected credit loss on the balance, which is 10%. So you are required prepare the audit working schedule having 5 sections: for beginning trial balance, end year draft trial balance, adjustment, profit or loss items, and statement of financial position items. Each section should have debit and credit columns, therefore 8 columns. So here they had an error, because if there are 5 sections, there should be 10 columns, not 8. There should be 10 columns. Supposed to have 10 columns, but not 8, as they are purporting to have only 8 columns. We shall be dealing with 10 columns, and I will do it here. So my audit schedule, schedule, and I'll have we shall start with opening trial balance. We need opening trial balance, beginning trial balance. I can just call it opening trial balance. Opening trial balance, opening trial balance. Remember, you need to have a debit, DR and CR. We have the closing trial balance, closing trial balance, So the opening, I'll change this to be cap, that way. So here again, I'll pick this, and I'll pick this, and they are shillings in thousand, shillings in thousand, that way. Then we have the adjustment. After the closing, we have the adjustment, the draft, end of year, draft our balance, then adjustment. Shall have our adjustments. Then adjustment, we have the debit and the credit, and the shillings in thousand. So profit and loss item, we have profit and loss items, the debit and the credit, shillings in thousand, that way. And the next one is a statement of financial position. Statement of financial position, financial position items. Again, we have the debit and the credit, shillings in thousand. Yeah, so those are our 5 sections that we really need. We need 5 sections for that. 5 sections for that. That's our audit schedule. So we have opening, closing, adjustment, profit and loss, statement of financial position item. And you'll find that the opening trial balance, you need to look at the items that we have at the beginning. And the first one is cash, the cash at bank. So the first one is under the opening. So these are at the beginning of the year. So we have the cash. In the cash at the beginning we had 5720. 5720. Then the next item online, we have the cash in hand. And the cash in hand, all these are assets. We had 620. Then the next item in line, we had the trade receivable, and for trade receivable we had a value of 18. The next item we had trade payable, and for trade payable this will be a liability. Trade payable 12.5. The trade payable, we come here, land at valuation at the beginning of the year. So we had land it was at 100. The next item, so I will copy this, copy, paste it from here, those values, okay, that way. So the next is building at cost, the cost of building. The next one is accumulated depreciation on building. Accumulated depreciation on building will be on the credit. Then furniture at cost, the cost of furniture. Then accumulated of furniture, accumulated depreciation on furniture, put it on the credit. And we had inventory of 56. Then we had share capital. Our share capital was 100. Share premium was 3000. And the long-term loan was 150. Long-term loan was 150,000, and I think that's all. Land was revalued Grade for depreciation, so we shall include other items later on, yeah, because we shall need to add other values, the expenses, especially for the expenses, because this one does not include any. So the opening balance were only those values. Yeah, those are the values that we had at the beginning of the year, the beginning of the year, so that so the adjustment will be what happened in the course of the year. Okay, so the closing balance, we shall find it, yeah, that way. So don't know how many items we shall add, but I'm gonna give it a space, up to this point, yeah, so that I will get articles, items from here all the way to that particular point, and I'll drag these, yeah, you'll find that our trial balance is not balancing. At the beginning. So we have 421, 340, and 305,500. That means there are other items that occurred in the course of the year that are not captured. Already you have started with cash at bank, which was 57. Yeah, 57 at the beginning. Okay, so you have seen it has not balanced. Let me first fix the other values that we are expecting. We shall have sales, we shall have admin, we shall have operating expense, the other expense, we shall have motor vehicle as an asset, dividends, we shall have the interest on loan, other operating, admin already we have it, distribution, then the distribution we shall have what, share premium, I think already we have it. We shall have revaluation reserve, that is in note number 2. Depreciation for the year, then after depreciation for the year, the adjustment, accrued admin already we have, prepaid, that one we have. Income tax expense, shall have income tax expense, we shall have provision for, shall have the credit loss, and we have expected credit loss, yeah, and the closing inventory, yeah. So those are some of the items. I think those are the items that we shall have. Profit and loss, we shall create it later. We have seen the first one, there is a difference. I will be able to merge that and be able to reconcile to know where the difference is coming from. Let's first try to put the closing, what we know, the balance. So cash at bank, the closing balance was on the debit. Remember, that's an overdraft. If it's on the debit, it's an overdraft. So we closed with this, meaning the payments were more. Then cash in hand, it was a positive because it was on the credit. Then trade receivable, yeah, the receivable we closed with 2,700. The payable we closed with 14,200. Yeah, on the credit payable 14,200. Then the building at costs. So remember, at costs it was the same value, land was the same value, At the end it was revalued. Yeah, there was a revaluation of 10. Land is to be revalued upward by 10 million. So we shall first create that revaluation reserve. Here shall create a reserve during the year. Revaluation of 10 million, 10,000, 10,000, and here from what we have added, and that one is okay, so that here my land will increase. It will increase by 10,000 for the revaluation. The building was the same, cost of 140, but accumulated the closing trial balance will be that plus the depreciation of a building that was agreed. The following have been agreed. Building was 5, and remember now that 5, we have what we call the depreciation for the year. This will be an expense. I will debit them. This one, I add this, I add this. So that's a combined depreciation expense for the year. And then I have done with that. So furniture, it will still be 100 at costs. Remember furniture, where is it? It was 100 at the end, but accumulated will change. Accumulated depreciation on furniture, so it will be this plus the depreciation on furniture that we had here. Dip on furniture, which was 10. Then in inventory, remember the opening is normally under the trial balance, but not the closing. Closing shall take it to the profit and loss. Yeah, that way. Then share capital increased during the year. Yeah, share capital increased during the year by 58.50, but we had a share premium. So a share premium will be this plus the 850. We have been told that under Roman 1. Yeah, the owners introduced additional capital by cash, of which 850 was agreed as share premium, so that this one will be this plus 5. Remember the total was 58.50, so I'll add 5,000 to that. Should be 105. Long-term loan will remain. Yeah, that one was not repaid. Long-term loan will remain at the same value. The sales, we had them somewhere here. So sales for the year, it was 359.90. That was our sales. Administrative expense, we shall have that plus for cash, bank and cash. Operating expense 670. We had motor vehicle of 73. We had dividends that we paid, interest on loan, and other operating expense. Distribution expense, which we had 29,500 as our distribution expense. Revaluation already have included that depreciation for the year. So the income tax will be under the adjustments. Yeah, that one will be under the adjustment. The following adjustments are necessary. That one we shall include it under the adjustments, and even the credit loss. Those ones are under the adjustments. These others already have dealt with them. So the closing will not affect us, but we shall see that. So hoping I have included all the other values. You just see my trial balance. Yeah, so it's almost have 711 and 701. So we'll include the something we have forgotten, the purchases, and our purchases was on 20 to 70. Yeah, and you'll find that we shall have 831 and 701, very big. Yeah, so far we have prepared it and it's yet to balance. And remember, the accounting equation is capital plus liability, and capital will be asset minus liability. So when you find this particular difference here for 21, and you minus this, you'll find that we have a difference of 115. The same here, if I was to take this minus this, the same value, 115,840, meaning that either the capital was understated, the capital was understated, and therefore we shall adjust our capital because we did not have a suspense, but it's not adding up because of the same value. So I will adjust that. Yeah, so it cannot allow the circular, and therefore I'll just add the value directly, 115,840, 115,840. You'll find that this one will balance at 421, and this one will balance at 831,730, 831,730. That way. So we deal now with the adjustments that we had. And our adjustments that we had in note number 4, we had accrued 640, accrued administrative expense, admin expense, we have it here. Remember, accrual is a liability here. So accrual, first we shall add it, accrued admin expense, and we shall put it under the accruals. Under the accruals, the 650, under the accruals as a liability. So here this one is wrong, it's supposed to appear on the debit, here on the debit, because we shall add that. Then the second one was a prepaid expense, prepaid operating of 21. I'll use the other operating expense here. Prepaid we shall minus, because it doesn't belong to this particular year, and it will be an asset. So here we shall debit because it will be an asset. The prepaid, it will be an asset. The next one we have income tax, 15,600, 15, so it will be an expense, 15,600. So this one is not supposed to be here, but here, columns, you must look at the columns correctly. That one. Then we have the income tax. Income tax will be an expense. The income tax was 15,600 together with an accrual, because it is yet to be paid. It is in the additional information. The next one is the credit loss. The credit loss will be an expense, credit loss, and it will affect the receivable. Our receivable, we shall minus the credit loss. Remember, credit loss stands for bad debts, and we shall create here the provision. Provision, we will calculate this. This will be, it's on the balance, so the carry down of the receivable was 2,700 minus a credit loss. You had a credit loss of 17, and you multiply by the rate, which will give you 1,900. Expected credit loss here of 19, and it will affect what? It will affect the receivable here. We shall add that value, 1,900, that way. I think that's all. we add these, it should balance 21,950, 21,950. And therefore the next will be the profit and loss item. Profit and loss item, the values that we have here for P&L. P&L, we shall start with the sales. Our sales, which was 350, and then we had opening inventory here. Opening inventory. The other thing is admin, and it was accrued. And we shall add, just a minute, we shall add this, the accrual. Okay, so we are supposed to start with equal, then we add this value that way, then other operating, we just pick directly. Motor vehicle, we shall not include. Dividend, we shall pick directly. Then this one I can just drag. This one I will minus. For the other operating, it was prepaid, so prepaid, we minus this value, that was prepaid. Distribution, just drag that one. Revaluation is not here. We have the depreciation for the year, depreciation for the year. Then we have the income tax expense, tax expense, and we'll drag this. It will take the credit loss and purchases. So the closing, we shall include it. First put that, and we don't have values there, so here we shall put the the purchases. Closing will be on this side. Closing inventory, we had it here. Yeah, that way. I think that's all that we have, and we find that the difference will be the profit for the year. Profit for the year, and this one you can minus. Can minus it anywhere to avoid. Let me do it here. See whether it will agree. Because yeah, 56. If I can bring it here, yeah, it will not agree because of the circle. That test. So here we shall put it directly. 5610. 5610. You'll find that it will balance at 410,890, 410,890. So that is our profit or loss item. We go to financial position. Starting with assets, our cash was an overdraft. These are the cash was a positive, and the receivable, we minus the allowance and the rest. The credit loss payable on the credit, then land at valuation, and I'll pick the two. Then we shall have accumulated depreciation on building. Then we shall have our furniture and accumulated depreciation on furniture. Accumulated depreciation on furniture. Then we shall have inventory, the closing. We'll use inventory, the closing letter. So capital here. I'll drag this, capture up to that, the loan note. Then the others will be motor vehicle here, asset and accumulated of 14. The other item that we had is a revaluation reserve of 10. Then coming down, the closing inventory is an asset. Then coming down to accrual, which is a liability. Accrual, prepayment, and the last one is a profit for the year. profit for the year that way, and I will combine this to see whether it will balance. Yeah, and it is balancing at 502,600, 502,600. And that's how that particular question 24 for the audit was supposed to be prepared. So the question, I have realized it was having two errors. The first error is on the capital. When you add asset minus capital, asset minus liability is not adding up to the capital that you had been given. And the other thing, they have talked about the 8 column. Yeah, they pasted 8 column from the previous setting, but this one they need 5 sections. 5 sections has got 10 columns. Yeah, 10 columns for debit and credit. Yeah, because the previous two settings, they have not included the opening or the closing. They just needed the trial balance, only trial balance, without having the opening or the closing. That's why this one we are having the 10 of them. And that's all under that particular question, the way it was supposed to be done. Kindly subscribe. Yeah, subscribe to this channel. Yeah, the subscription will enable us to reach many, because when you subscribe, then the channel will be visible to many, and many people will benefit from this particular content, especially the CPA students. So continue subscribing, hit the notification bell, and even hit the like button, so that we know we are together. And that's all for this particular video.